Now I'd like to move on to Evan, who is joining us from Nasdaq to talk about the intersection of technology, risk management, and ESG. This is a subject that Evan and I have had a lot of opportunity to talk about over the many years that we've been engaging. Nasdaq is also using Data Moran for their own materiality process. So welcome, Evan.
Hi, thanks for having me. Not exactly joining you from Nasdaq, but the nearest closest facsimile.
Yes, fair point. The physical versus the virtual.
A perfect backdrop for a discussion of digital tools.
Absolutely. Well, thank you, Evan. I think it would be really great to hear, what is the role that stock exchanges are playing right now in driving ESG integration, both in terms of corporate strategy, but also investment practices. We see a lot of different players influencing this landscape, and stock exchanges have a key role to play.
Yeah, we certainly have been working with our listed public companies for a long time on ESG, not only improving their practices, helping to set best standards, helping to get them the credit they deserve from places like rankings and ratings firms and investors if they're doing something on ESG. We have teams, we have corporate services that focus specifically on this, on IR advisory, on board tools, things that help companies navigate sort of this more complex world of transparency when it comes to ESG, or things that aren't traditionally in the financial filings. We also have products and services that are targeted at other aspects of ESG in the marketplace: index creation, ETFs, we have a sustainable bond market, all of those things where we find that there's a significant amount of demand for capital to flow into more sustainable directions. We're trying to facilitate that. Mm-hmm. But if I had to put our sort of reputation in a certain bucket, it would be as a thought leader. We sort of sit in between listed companies and regulators and investors as a thought leader when it comes to transparency and the currency of data, the value of data in the marketplace. So for a long time, that was working with investors and companies on disclosures related to financial filings, related to financial performance. And in the last 10 years, it has turned, not entirely, but at least partially, towards other aspects of sustainable performance. What are the indicators of long-term value and long-term value creation that companies can track, can disclose, and what do investors actually want to look at? So that has been mostly a move towards data and away from narrative reporting. It has been mostly a move towards more formal processes around how you report this data, and away from some one person sitting in HR somewhere who comes up with a PDF. So that's been the scope of our efforts so far. And we put out our first ESG reporting guide 2 years ago, had a fair amount of take up around the industry. It was fairly rare at the time for stock exchanges to put out a document that says, here are some ESG practices and metrics that we recommend. And now, more than half the industry, most of the stock exchanges on the planet, are putting out a similar report. So all of the exchanges are working with their listed companies, either through rules or through best practices or through recommendations to create better performance and certainly more transparency.
Absolutely. And to your point about having different types of stakeholders internally involved in that process, and the need for this to become a much more formal process, very much in line with what we're seeing from a financial reporting perspective in terms of having audit and assurance engagements. What about the external side and external stakeholder voices? What type of stakeholders need to be incorporated in the analysis a company undergoes when trying to determine what are their priority areas, and why is it important to incorporate different types of voices?
Yeah, we've been pretty straightforward from early on the value of companies expanding their stakeholder set and looking outside the company and looking to different groups of individuals that have a stake in the company, either on input side or the outcome side. We put a large section on materiality and expansion of stakeholder interests in the first version of the reporting guide 3 years ago. We were one of the co-signers of the BRT letter, so we formally believe in this, that well-run companies and integrated management teams look at all kinds of decision-making points and different audiences when it comes to finding value for the company. Mm-hmm. We tend to work a lot in the space between investors and companies, because we want investors to get what they need to make a decision and hopefully stick with Nasdaq listed companies for a long time. And also make sure that the companies that are engaging, taking a step towards this new era of transparency and trying to be more responsible across the E, S, and G spectrum are being properly valued and included in screens and invested as they will deserve. So there is, I think that our point of view is definitely the broader stakeholder analysis and integration makes more sense. And I know we'll get to this a little bit later, but there's only so much you could do by hand. You need tools. You need ways to sort of integrate that information and that data into that process. You can't just, pick up the phone and start calling everybody you know. It's got to be a little bit more disciplined than that.
Yeah, absolutely. And I think, just in today's day and age in particular, given the recent pandemic, being able to engage at conferences, in forums, at stakeholder roundtables is obviously taking on a whole new dynamic. So in terms of technology, how do you see technology supporting these types of processes?
Well, we were going to talk about this before the last few weeks actually happened. So it's interesting that this has only accelerated things. The need for technology to fill in the gaps where human intervention and the limits of the expertise, in particular at companies, end. This is something that we deal with. We tend to deal with companies at the middle of the spectrum, size-wise, lower end of the spectrum, companies that may not have money or resources for a high-priced sustainability consultant, or maybe they have a variety of tools that are shared among different team members. Maybe they have a dedicated person or team, and maybe they don't. But they need to find a way to expand their footprint without actually expanding, what they spend or who they have involved. So tools are vital, and doing the kinds of research that Datamoran and other tools afford helps them get a handle around a couple of key issues. One is benchmarking. Almost all companies want to know, if I'm going to go on the record with my ESG performance, where do I fit into the performance spectrum with my peers and my colleagues? Are investors going to treat me more unfairly by having a zero record as having a record which I might view as poor? Even though in most cases it's not really poor. Comparatively, you're probably in the same place as most companies, at least in the US. And then part two would be this sort of stakeholder integration piece. You need to find a way to get voices outside the company into your analysis so that when you are coming up with a materiality spectrum, when you're looking at the topics that you need to focus on, you can't do 20 or 30 or 40 things. You can't report to 40 or 50 different organizations or ratings firms or reporting standards. You need to find a way to isolate the ones that are meaningful for your business. And you need to turn to tools and technology in order to fill out that spectrum. Otherwise, it'll be the same story told to the same small handful of people all the time, and you won't be in those screens, in those talent pools that you need to be in to succeed.
Yeah, absolutely. And thinking about that, also it's about the data challenge that you spoke to earlier, being able to break down pretty complex data sets, because ESG is complex and a lot of the information is not nicely packaged into a number. And if it is, it's not necessarily comparable from company to company because of all the contextual information that's at play. So, in terms of having investors and corporates looking at the same data, that there could be a lot of opportunity for growth on ESG integration there as well.
And that's really where we have thought some of our influence might be best used. Standardization, harmonization, finding the KPIs and metrics that actually are meaningful for both sides of the equation, trying to standardize on methodology and calculation so that everybody's speaking the same language, and that you don't have to rethink all of your data when you compare company A and company B, even in the same sector. So we have not sought to replace existing standards like GRI or SASB or CDP, but to sort of coalesce the ones that are meaningful, find the common denominators, and give companies a working template that they can start with if they're going to tell the story.
Yeah, and working template is important, right? Because the pace of change, this is change. The types of issues that companies need to think about and address are obviously changing and evolving, and it's becoming a much more dynamic process. And that's very much why you were interested in using Datamoran as well. And I know it's very early days for you to start using Datamoran from a materiality perspective, but just curious what your thoughts are there and why you see this going to take you to the next level.
Well, I think you alluded to it in your intro. I'm shocked that there are 620 instances so far of coronavirus in filings that have been turned up through the Datamoran tool. I could very likely have a conversation with my senior leadership or with my board where they say, okay, we probably have to address what's going on with this crisis, but we have 6 months, or nobody's really talking about it now. And being able to push back against that and say, no, everybody's actually talking about it. And this is the kind of stuff that the kind of areas they're getting into, and the way they're embedding it in different reports and narratives is actually really useful. So benchmarking is sort of a primitive term, but it is sort of a benchmarking thing. Where are the emerging standards? What do we want to aspire to? How can we use a tool that goes out to the web and finds information or scours for certain keywords or looks for things that are particular to the exchange industry or to capital lending in the face of the virus or access to markets or, you know, the ability of markets to persevere through disaster planning and things like that. Mm-hmm. Using a tool that goes out there and it gives me a baseline is really, really essential, because no matter how deep my Rolodex is, I couldn't call all the other people like me at stock exchanges and get the same amount of information.
Absolutely. Yeah. And you hit a very good point at the beginning, you know, having data and proof points to build the buy-in internally. And what we're seeing more and more with how Datamaran is being applied is it's, you know, using Datamaran to identify issues, but also monitor issues and then share that data with different types of teams and executives internally to get that buy-in. And it's exciting to see the developments that are happening on the data landscape and the role that Nasdaq is playing there.
Yeah, and even if it's, I mean, we always rail against the fact that so much ESG data is looking at past performance and not really forward looking. But the more real time it is, the more you are able to actually look at what the standards and emerging practices are right now today, the better able you are to forecast where the company needs to go. So another thing where a tool is always going to do it better than a person can. Not everything, and I think that there's a fair amount of human smarts that go into the analysis of these different things and the prioritization exercise, but tools are vital to the process.
Absolutely. That's the combination of the human and the machine. And thinking about the human, would like to open it up to any questions or comments from the group who's listening in. So again, if you have a question or you'd like to make a comment, feel free to unmute yourself. You can also chat that to us in the Zoom chat box. So there's a little chat icon where you can click on that and type in your question.
And while everyone's thinking, you mentioned the Bloomberg article, which I thought was very good. There was also been some coverage about the SEC and BlackRock in particular looking at human capital metrics, human capital management in the face of the virus, and looking at trying to find some disclosure, some KPIs that are specifically addressing the preparation for disaster, the preparation for remote work and things like that as they intersect with human capital. So there's lots of good information that's sort of coming out now that cements the intersection between ESG and this particular era, which I think is pretty strong.
Absolutely. Very good point. So if there are no questions from the group, I might pose a question to the group. And if you feel so bold as to answer it, please unmute or respond in the chat. Is the current crisis currently accelerating attention to your ESG or sustainability strategy internally?
For me, yes. I'll go first.
Okay.
For me, yes. I mean, there's a fear out there in the sustainability and the ESG reporting community that this will take attention away. ESG and sustainability be the first thing cut when companies are trying to find, you know, their way through a crisis. But for me and from my colleagues, I've heard only an increase of focus and trying to figure out how better ESG practices could have not predicted this, but at least made the companies more resilient. I think of things like the TCFD scenario planning piece, which forces a company to go through a very creative exercise to look at all kinds of scenarios that could impact the ability of the company to produce and sustain its workforce and its value and its products over the long term. This would have been very useful in that context if companies had been through that process. So I don't think it's a stretch to see the connection, and I think that smarter companies are going to see that too.
Yeah, and I see some responses coming in, you know, too early to say, but likely to increase. This could potentially take focus off of ESG in the short term, but not necessarily in the long term. You know, of course, in a crisis, all hands on deck. But yes, I hear you, Evan, and it's encouraging to see that that's happening with what you're seeing. It's something that we're seeing too with a lot of companies we've had having conversations with recently. There's a more specific question about the reports that we were looking at in the disclosures on Datamaran. So just to answer that, those are 3 types of reports that we look at in Datamaran. One is the annual financial report. One is the annual sustainability or ESG report. And one is the other set, sorry, are the SEC filings, both the 10K and the 20F. So I'll just go back there, and what you can see here is that down here you'll have the report types highlighted for you. So what we can actually see is that these disclosures are predominantly taking place in both the 20F and 10K SEC filings, as well as financial reports. And for 2020, if we just want to filter and see where that discussion is taking place, we can do that, because this was looking over time. And the vast majority, as we see here, are within the 10K filings. All right. And there is one question here, actually. So Evan, maybe you want to take this. Will the coronavirus crisis elevate the social and human capital aspect of CSR and sustainability on par with the environmental dimension? Any thoughts there?
Yeah, well, I think the S part of ESG has already been elevated. I think it's been clear that not being a laggard because it's difficult to measure doesn't mean that it's not important. And this is, if anything, it's going to drive home the importance of the S factors in a company's sustainability and ESG program. Something like this will do it. So I'm seeing lots of discussions among peers and colleagues around how this intersects with health benefits, how this intersects with leave policy, how this intersects with talent. You know, how many physical people do you need on site to run your business? Even fundamental questions like that, which inevitably fall into the S spectrum, are I think, elevated. So I don't know that this means that we have to refocus on CSR as part of ESG. I think this just magnifies the value of S within the operation of the company.
Yeah. Great. All right. Well, thank you so much, Evan. Really appreciate you taking the time.